So apologize, everybody. I have people stacked up and I didn't see Ernie join us. So the gang is all here and let's get started. So first want to make sure everyone is aware that this Lunch and Learn is being recorded. And with that, for those of you that might not know me, I'm Laura Kubishak. So I'm the venture catalyst for Washington County. So what I do is I meet one-on-one with entrepreneurs. I coach them on their business plans, and I also connect them to additional people, programs, or capital to help fuel their success. And so basically I help entrepreneurs start and scale their businesses. And I also put on programs like this Lunch and Learn. So we have a great panel today to talk about entrepreneurship and the economy. And we also have a great moderator, Ernie Bootsma, who is an attorney at Buchalter Ader Wynn. So I want to make sure I thank the law firm Buchalter Ader Wynn, who's sponsoring this event and other events throughout the year. So thank you so much, Ernie, and your group. And I also want to recognize at the bottom of the screen all the people that support me in my role as venture catalyst throughout the year. So it's Washington County, City of Hillsborough, Forest Grove, OCF, and Ty, Oregon. So it takes a village to help support someone like me, and I appreciate everyone's help. So we want this to be an informal event. So what I'm going to do is I will monitor questions in the chat room. So please post them, and then I'll go ahead and work them in throughout the program. And with that, I'll pass it over to Ernie to kick things off.
Well, thank you very much, Laura, and welcome everyone. Have a great panel, as Laura mentioned, and I'm going to get started right away. And I will let, I think, Daniel, you're first up if you want to spend a couple minutes and tell us a little bit about yourself and what you do.
Absolutely. Thank you, Ernie. And thank you, Laura, for putting this on. Again, my name is Daniel Ridator. I've been with the City of Hillsborough Economic Development Team for going on my 6th year. I come from Southern California, where I ran their economic development shop. And we worked on different facets there because we had sales tax. So it was a little different animal. But up here, I am responsible for the business retention expansion program. I'm also responsible for their workforce development, workforce development pieces, as well as their small business and entrepreneurial efforts. So I go back to you, Ernie. All right,
thank you, Daniel. Next up, Tori, do you want to tell us a little bit about what you do in economic development?
Sure, thanks, Ernie, and appreciate the opportunity to be a part of the conversation with the panel. My name is Tori Campbell, and I'm the Director of Economic Development at Prosper Portland, which is the economic development agency for the city of Portland. And within my department, when it comes to entrepreneurship, we have a variety of programs and supports that really help businesses from beginning all the way through growth to traded sector spaces. So we have a number of programs that really are geared towards helping entrepreneurs early on figure out is their business idea or business model actually viable. I think you'll hear probably in this conversation, and as well as noted in entrepreneurial spaces, of the desire to quickly fail as fast as one can and make those necessary pivots. I think some of the unique pieces with our work is the connection of equity. So again, thinking about the entrepreneurs in our city who continue to have strong, innovative ideas, but oftentimes are facing really systemic barriers and oftentimes exclusion towards opportunities, and really wanting to release them more fully into the entrepreneurship ecosystem for our city. We see that when we think about equity, particularly centering around race, not just simply as a moral imperative, but it's just competitively smart for us as a city to continue to make sure that entrepreneurs of all stripes have kind of the equal access to pursue their dreams really unabated. And also within that, we work tremendously hand in hand with a lot of wonderful partners. I think that's the other thing to note, that so much of our work with this city, helping us to be both nimble and relevant, means connecting with wonderful partners. And so really happy to be a part of the conversation. Look forward to what we are going to be able to talk about today. Thanks, Ernie.
Thank you very much, Tori. Well, we've covered Hillsborough and now Portland, but now we're going to turn it over to Peter, and Peter is going to introduce himself. He works for the state, but then also the way we're going to structure this panel is he's going to be doing a little bit of a slide presentation first, and then we'll kind of go back to the full panel group. So Peter, on to you.
Yeah, hi, I'm Peter Holzman from the Northwest Economic Research Center. We're located at Portland State, and we do a few things. One of them is policy analysis and a bit of business consulting. But in this role, the kind of role I'm speaking to you today is regional forecasting. So we look at a number of industries, employment, population, that sort of thing, and forecast it. And so let me get into the weeds a little bit. I kind of see my role as setting the stage for the discussion, because I think Daniel and Tori know significantly more about the particulars of entrepreneurship, but hopefully this is helpful in, what's going on with the whole economy. And so everyone can see this okay? All right, perfect.
Yeah, looks great.
All right, and so when we do economic forecasting, we kind of start at the top, and the largest thing that we can talk about is GDP growth. And and one more thing to note is a lot of these graphs I get from Oregon Economic Analysis, which our consultant or our research center was founded by the former head of that office, and that is a state office. They just recently released their forecast, and we're in the process of making ours, and so I'm borrowing from them pretty heavily. So feel free to check out their stuff. I don't want to, not give them credit. But anyways, so strong GDP growth ahead is the title, and that is because right now we have a number of factors that are very positive for overall production growth, and these are a lot of pent-up savings, a lot of kind of pent-up demand for things, the stimulus and the new vaccines coming into use. And so what we're seeing, and this forecast shows, is about 7% in 2021 and around 4% in 2022. But that's a pretty optimistic picture, and yes, some of that is catch-up growth. It's just getting back to where we were, but some of that is also above and beyond that. And there are a number of factors that we'll talk about as to why economists tend to be pretty optimistic about the growth potential in the next couple of years. However, to kind of counterbalance this optimistic picture with a little bit more of a pessimistic reality, this is probably one of the more useful graphs in answering a number of questions that are come to us a decent amount. And what it tells you is what's going on with employment in different wage brackets. And you'll notice that the low income group is not, this is for Oregon, and the low income group is not near back to where it was and was much more adversely affected by the COVID recession. And in comparison to the other two, high and middle, who are relatively unaffected, that tells you a lot about who has the savings, why asset prices are rising, and so on and so forth. An even more depressing picture, same picture except different brackets and a different data source. So the cutoff for this one was below 40,000. This is below 27,000 in income, and you can see those job opportunities are drying up substantially. And you can kind of get into this in terms of by industry and kind of have an explanation for that. And a lot of these jobs tend to be the more elastic leisure and hospitality type jobs. And so in the Portland MSA, for example, we're about 58% of where we used to be in February of 2020 in terms of leisure and hospitality employment. A lot of these jobs tend to be a little bit the higher paying job tend to be more in the trade and manufacturing sectors. And for example, in Washington County, I believe durable manufacturing is at 97% of where it used to be. For the Portland MSA as a whole, it's at like 95% of where it used to be, substantially better. And that partially explains what is going on here. I do think it is also important to note that one of these things that also helps explain is the kind of racial inequities and ethnic minority inequities that have been exacerbated by the COVID pandemic and the response in terms of disproportionately those groups tend to be in this bracket, and they are the groups that are more adversely affected. And so in terms of stimulus, one of the reasons, one of the big questions that's come up in stimulus is the first two weren't all that targeted. It was incomes up to $200,000 were getting checks and that sort of thing. And a large portion of that was going to people in this bracket, in these two brackets, the higher earners. And that is partially explaining what is going on here, which is this is the checkable deposits. This is part of kind of the excess savings that's happened during COVID, and they estimate almost 2 trillion, 1.5 to 2 trillion in excess savings that have been built up over this year and a half, where part of it is stimulus, and these groups are getting money that they wouldn't have had previously, and part of it has to do with the fact that a large swath of the population can't go out to eat, they can't travel, and the money that they were spending there, maybe they're buying some durable goods, but for the most part, they're saving them. The one other point I wanted to make based off of this graph is one of the larger concerns that forecasters, which is there's not very many of us, but one of the concerns that we had was the idea of economic scarring. And that was that these higher wage jobs, especially in the manufacturing sector and the traded sector, tend to be very interconnected and very sticky, meaning that you don't expect a lot of fluctuations in employment in durable manufacturing in Washington County. And if there is a large loss, it takes a lot more to get those jobs back because of, contracts, supply chain considerations and the like. Whereas in leisure and hospitality, you can shut down a bar for 3 months and then reopen it and hire people back relatively easily. And that's why you see a massive amount of volatility in the leisure and hospitality sector. So one of the encouraging, it is a overall depressing story because it means that those who most need help have gotten are in the worst position, and the essential workers and all that. But the one positive is that it does bode well for the recovery, that the higher wage jobs and that manufacturing and such that take a lot longer to come back haven't experienced as much of a loss as we feared going in. So if I had a graph on our previous forecast and our current forecast, you would see that we downgraded it after the second wave. And now we would re-upgrade it. It would be back to where in a relatively optimistic, shorter recession than what we feared what was going to happen. And I talked about this. The one other aspect I wanted to touch on here is that two other questions we get. We get asked a lot about housing, and there's two reasons why the housing market, and again, this is entrepreneur talk, but I can't help myself. And two questions we get is, why is housing going crazy if there's a recession and so many people are in harm? Well, in part of that, it's because the group of people that can afford housing hasn't been as affected as the group of people that can't, and they have an excess of savings. Also, the supply chain has been affected, increasing prices of wood and so on and so forth, and inventory is way down. And so all of that leads itself to really high house prices. Similarly, the stock market's been has been basically unaffected, if anything, by the pandemic recession. And so basically the same answer. The people that own stocks and have excess savings have been largely not unaffected, but not affected in nearly as bad of a way, in such that they can still buy those assets. Moving on to a little bit more relevant discussion. One of the other very positive things that we've seen is that new business formation, and this is where entrepreneurs really come in, new business formation has actually gone way up significantly. And there's a number of plausible explanations for this, and I think others know more about why this is happening, but as a forecaster, we see this as a big positive for growth. If we have a lot of excess savings, that could lead to higher venture capital and so on and so forth. We have a number of businesses starting. There's a number of new technologies that can kind of interconnect and hopefully, play off of each other in a way that's beneficial to society as a whole. A lot of this leads to a good potential for strong growth going forward. And another thing, I can't help myself with housing, I can't help myself with population, because when it gets to regional, differences in regional economies, population is a huge driver. And if you do population forecasting, the most important aspect of it is migration. It's very simple. Births minus deaths plus net migration is how many new people are coming to your area. Births and deaths don't really change very much, so we tend to really focus in on migration. And we had big spikes previously. We are now forecasting a steady decrease. That's not necessarily a downside, because this was uniquely high, and there are explanations for why we think that we had uniquely high migration in the previous decade. And those are, one, that Portland was relatively cheap compared to other West Coast cities. And I know people in Portland don't normally believe me on that, but the whole area in terms of housing, in terms of everything else, was relatively cheap. And so if you were looking to move somewhere, it made a lot of sense to look to move to Portland. Similarly, it had a Portlandia vibe. There was some sort of indefinable thing that made Portland somewhat special. And I'm not saying that's gone, but there are concerns with the national coverage of the protests that people's perception of Portland has changed. And there's no, we don't include this in our forecast. It's just something that we're paying attention to, because it is something that we get asked a lot. It has the perception of Portland changed. And so much of our strong growth previously has been because of the type of people that we've brought in. Younger, probably young, relatively well-educated people in their 20s and 30s looking to start families. And that's kind of that root setting growth that is really beneficial to an economy in the long run. And there is questions if migration is going to continue at that pace, considering everything that's going on, and also the fact that Portland's not cheap anymore. It's not as cheap as Boise, it's not as cheap as Bozeman, Montana, and so on and so forth. And lastly, to close, I've been up and down with the optimism and the pessimism, but I'll end on an optimistic note. So one thing, it is looking like, even though we've hit, it was a very stark decrease in employment, and Oregon was substantially hit, it is looking like we're going to have a significantly faster recovery than previously. Again, this is the state forecast. I think the Portland MSA forecast, when I finish it, will be a little bit more optimistic than even this. And this is a pretty optimistic outcome, that we will be back to full employment, or back to where we were at least by 2023. This is, again, a very good thing. I suspect for the Portland MSA, and I have to run the numbers and do all of that stuff, that late 2022 is probably where we're going to end up in terms of back to where we were, which is less than 2 years away.
Great. Thank you, Peter. There was just one question that came up in chat room, and they were wondering if you've been able to quantify the dollar amount of damage caused by some of these demonstrations, and what are the key requirements to rebuild Portland's or Oregon's reputation? How long will that take to rebuild? I think you were already talking about that, and it seems like there's some definitely positive things going on, but I think there's been numbers floating around in terms of some of the damage to buildings and things like that, but I don't know if that's been quantified.
Yeah, I don't know if it's been quantified either. We were asked actually over the summer by some news group, and we didn't have answers.
Okay, all right, great. Well, thank you, and turn it back over to Ernie.
All right, well, thank you, Laura. Thank you, Peter. So now I really want to just start getting each of you panelists to just, maybe we'll answer some general questions to all of you first. And then if other people in the audience, if you've got questions, please feel free to be putting those into chat and Laura can introduce them as well, or I can do that. Let's see, maybe to the whole panel, that maybe it's through your own personal experience, not through data and so forth, but are there specific industry segments? I think, Peter, you were good at sort of identifying segments based upon people's economic backgrounds or kind of where their job wages are and how it's affecting them. But maybe are there industry sectors that we're seeing that are recovering well, or that we see as the key to future growth right now? And this out to all three of you, if you have thoughts on that issue.
I'll go ahead and jump in. I think within Portland, and really appreciate what Peter shared. I think it definitely provides a bit of a baseline of a conversation thinking about entrepreneurship. The industries that we've been primarily focusing on within traded sector, Prosper Portland, that have done fairly well, or at least have gone through fairly unscathed, have been obviously within the tech industry, being able to quickly pivot. We've also seen within clean tech, that's also an industry that also has more promise to. I think with the new, with Biden's new push, we anticipate that there will be more opportunities being made available for that industry. And so we really want to, we're really working now to position companies to be better poised to interact in that space. As an example, we have coming up this week, a B2B clean tech conversation happening where we really are trying to connect companies both locally and regionally, as well as even in Japan, which we've been having a lot of relationships with around building opportunities for accounts and connections. Just seeing that as an early indicator of the opportunities that we hope will continue to grow and expand over the next few years. Two of the other clusters that have had some level of impact have been manufacturing and primarily around transportation. I think, again, supply chain, those things have already been called out by Peter, and then athletic and outdoor, again, primarily just around supply chain, but we do believe many of those will be able to bounce back. So I would say those are the industries that tend to be our primary focus at Prosper, really netting the larger opportunities for livable wage jobs that we continue to prioritize during the season. And we know, again, that leisure and hotel and restaurants are a necessary and viable part of our city, as well as just the commercial corridors and the retail kind of chic boutiques that really dot our city and really have been a strong engine for growth. And so we also are wanting to prioritize how do we stabilize and keep them open as best we can, knowing that they really are been hit really hard in light of COVID, probably being the primary driver of business closure and the lack of retention, and obviously some of the reputational repair that has been called out. So those are just some of the initial ones I'll kind of start with.
Thanks, Tori. Daniel, Peter, any thoughts on industry segments and kind of where you see the next few years going? And
I could go next if you guys don't mind. In Hillsborough, like Tori said, we're really focused on technology because that's the Silicon Forest, and we have a lot of our supply chain companies that are tied to Intel and the like are growing. So that with that, we know that that's coming back. We talk to them pretty much on a daily, and they're trying to keep up. And with that comes, workforce and trying to put programs together around that to try to get them to be able to rebound and be.
Oh, you froze, Daniel. Such is the joy of Zoom calls. Everybody has had
Ready to rebound.
All right, you froze for a minute, Daniel. Go ahead.
Oh, sorry. So one of the other industries that are growing in Hillsborough is bioscience, and we've put a pretty strong attempt to strategize around that. We have Genentech in our city that is continuing to grow. They just announced another expansion. This will be second or third in the last 2 or 3 years. You know, they're going to be hiring close to 150 people. So again, it goes back to that workforce priority, quite honestly. So that's what we see. We see that bio is something that is starting to really take shape. It's not something we've had in our city, other than Genentech and Acumed, but it is something that through our recruitment strategies, we're getting a lot of traction on. So we see that as the next wave in Hillsborough, is try to attract those types of uses. Manufacturing and traded sector manufacturing aside, from the, you know, tied to supply chain to Intel is also growing. As you could see, a lot of the national security type companies that are making things for that industry is also growing. So those are two things that we see that are rebounding and are rebounding strong.
Hey, there's an interesting question in the chat room that I'd be interested in Tori and Daniel responding to. And in the tech space, so I think both of you all talked about, you know, growth in the tech space, which is fabulous. But the question is, you know, how can we in the tech space serve or help low-wage workers and the community as a whole by providing jobs and opportunities? So any thoughts on that or examples where tech's been able to help people that might be in these lower wage jobs?
Yeah, I think that, you know, there really is a continuum of business opportunities particularly within the tech space to help low-income communities. We also know within, you know, tech space, oftentimes the best jobs are those, you know, the 100K jobs are going to be around engineering and elements like that. So we see within a tech company, even now with our programs like Tech Town, where companies are making great strides or efforts to include the diversity of their overall workforce, but oftentimes those jobs are going to be in the clerical, you know, the things that are not within the engineering aspects. And although those jobs are incredibly valuable and important, and I think those are ways that tech companies can participate in creating more opportunities, we also think like, how do we also bridge that gap towards just more intentional recruitment and retention of more diverse workforce that can really fill all ranks of your tech companies, even into the C-suite as well. You know, so that leadership is both reflective of the demographic shifts and, more importantly, the really rich talent that makes up both our local and regional pools. We think about BIPOC employees. So a lot of our work has been helping companies think about culture change in terms of how do they, if you want to think about it, ensure that the soul of their company is conducive enough to really recruit and retain top talent that has that diversity piece that we're looking for. But also realizing that there is the give back, there is the opportunities that tech companies can play in providing meaningful internships and work experiences again. But that tends to be a long play. That oftentimes suggests then if we do that, then the solution is going to be 10 or 15 years down the road when that young person graduates and comes. But we're also under the belief that talent is currently resident now. One of the interesting things that it's bittersweet, good and bad, is because of the pandemic and it's accelerated so much of the very thing that we're doing, which is using digital platforms in order to not only do work, but just to do life, is many tech companies are actually exploring more nationally, finding that talent in diverse places that we may not see here in Portland just because of our demographics. And that in and of itself is encouraging. But again, for us, you know, thinking about local economy, we also want to make sure that those jobs that are being handed out and provided for that diverse talent pool are also being locally sourced. So that's just something that we've been working with tech companies on, is how can they, from a leadership standpoint, build companies that are built for diversity from the inception and inclusion, where they see the value of that different kind of diverse thinking creates a more competitive edge, and also how to make sure that they can help at the various phases of supporting low income and particularly folks of color in these job opportunities.
We've been focused for the last couple of years when we put together the Prosperidad Economic Development Center, or Economic Empowerment Center. That was one of the first things we did, is bring in industry to the table, so that they could be there when we were developing the programming and removing some of these barriers that could potentially cost them to get into those jobs. And as what we found out is that by bringing them early, industry that is, is they didn't, I think Tori just said it, it wasn't just the entry level or the high level, it was across the board. So we trying to understand, how do we get an existing employee that's already in the job market to the next step, right? To get them to the next level, and accelerating that. And a lot of times what we realized was minor things, you know, talking to industry, they're like, well, they don't have this. And it was one specific thing, you know, that could affect not only that one individual, but it was affecting an entire pool of people that were being affected by the same thing. And it could be language, it could be mathematics is learned differently, believe it or not, you know, around the globe. So just understanding and tweaking some of that stuff was giving people that were already in the job market a leg up, and getting them moved up. What that did is, as soon as you did that, now you had an entry level position that you could backfill with the people that were coming out of the center. The other thing that we've done is really just through our industry group is get them to share with us and get them involved in whether it is a robotics club at a high school, or if it's, you know, the Chicas program at Centro Cultural. That is the long-term play, like Tori said, but it's just as important today as it will be, you know, in 15 years, because it is getting diverse populations introduced to manufacturing and tech. So those are the things that we've been doing, and it all really just starts by being strategic with the partners that we're bringing to the table in those communities, and partnering with the people that are already based, they have trust based in the communities of color. And we're working really closely with Adelante Mujeres and Centro Cultural out of Washington County. So those are the things that we've been doing, and we've been noticing and learning, quite frankly, since we've been just diving into those types of work.
Thank you, Daniel. I might shift another question that we got in the chat room that I want to throw out, and that it relates to the fact that if we start moving back into this period of growth again, do we have that pool of talent? Some of you, Tori, you touched on this a little bit, that you believe this talent is in place, but are we going to have the pool of talent that we need to spur the growth that we see in the next couple of years? And then how do we bring that group together with the need?
I think we need to get creative, Ernie, or whoever asked that question, because the pool of people, we're all, I believe that the entire region is going after the same pool of people. So we need to get creative on how we as cities, as counties, you know, as an entire area, is where do we go after these people to fill these spots? One of the things that we've been doing the last couple years is, before COVID even, is going into the secondary and tertiary markets of employment. You know, it's the fast foods, it's the service entity, and that's what our partners are doing, to take these folks into a career potential in manufacturing and getting them, you know, we're partnering with them to put programs together. The other group that's being targeted, as far as, it's not necessarily a minority group, but our industry sees a lot of value in the veteran community, and we've been working with them to develop some programs on how to get a hold of those folks. And quite frankly, COVID was very helpful, and it was instrumental in a lot of the work, because you're able to get out of the region. We were working West Coast, and, you know, overnight we're able to do a Zoom call and reach Texas, you know, whereas before you couldn't really do a career fair to people that were serving in Texas. So those are all things that have been opening up, but I do think that we need to get creative. Importing people isn't always the best. It's part of the strategy. It's just not the entire strategy.
Well, I'm going to kind of shift to the other side of that equation. Then, is, you know, what are your thoughts on the role of entrepreneurs as a source of this growth, and sort of now bringing those group of workers into their business. You know, how do entrepreneurs get involved in this process? And Daniel, Tori, do you guys have some thoughts on that?
Yeah, I mean, we often talk about how small businesses within the city of Portland really play such an outsized role in terms of our overall economic health and growth. Over 90% of our economy is driven by small businesses, oftentimes less than 10 employees. And so you just think about the sheer amount and volume of business leaders, innovators, founders, entrepreneurs, and how necessary they are. And so they have always and will continue to play a vital role with the trajectory and growth of our city. I think for us, that then means how do we ensure that we have a strong ecosystem that support businesses from inception all the way up to traded sector? Like, how do we create the necessary pathways so that businesses in their various kind of life cycles have all the necessary resources, both in terms of growing their business know-how, access to capital, access to new markets, and eventually as they grow, access to a diverse workforce. And really that's what we're striving to do as a city, and recognizing we have to do that in partnership. So it's a public-private partnership to do that. As we succeed in that, then we succeed in being a place and an ecosystem where people say, I can either grow up from within, or I can come to and know that I will find the necessary resources in order to do the thing that I need to do in terms of pursuing a unique passion or vision. So for us, it's always exciting to be an entrepreneur, because we know that it's an outgrowth of what's to come with respects to our region, our assets, reimagining them, but also, again, tapping into a diversity of entrepreneurs for us is incredibly important, knowing that our demographics are shifting and continue to grow, where we're seeing more and more BIPOC entrepreneurs being more necessary and more fruitful within the fabric of our economy. So for us, entrepreneurship, always important, always necessary. I think for us, the main thing is how do we eliminate and remove those barriers beyond just the own workings of figuring out is an idea viable, like Laura said early on, but are there barriers that we are putting in, unfortunately, that are harming businesses, entrepreneurship ability to succeed? I think one example is, thinking about the recession, often at that time, even when it comes to access to capital and venture capital and angel investments, people were more willing to do that first round. I mean, they were more kind of willing to risk there. And over the last, 10 years, we've seen that, investments have actually waited to that company has gotten to a place where they have more of a stronger proof of concept. And so things like that those seem like minor shifts, but for an entrepreneur, not having access to capital early on to prove out that model really stymies our ability to see, again, that continual flow of the necessary momentum of just entrepreneurs continue to figure and kind of fight, almost like kind of the salmon go up the fish ladder. You have to have volumes and you'll eventually see success. And so how do we increase the ladders to make them just more accessible along the way? That's the analogy I can come up with at the moment.
Thank you, Tori. Peter,
I don't have a colorful analogy like that, but I would just say real quick is that I agree that Tori nailed it. I don't have much to add. Entrepreneurs are the next wave of small businesses, and they are the lifeblood of employment in the U.S. and in Oregon. So we just got to continue to build that ecosystem so that they feel comfortable in coming to our region.
Thanks, Jamie. Well, Peter, I was going to ask you a question. Are there any of these economic trends that we've been discussing that are going to have the greatest impact on entrepreneurs as a class of businesses?
Yeah, well, the first one being the large savings that we talked about, and how that there's a lot of money that's freed up. And again, it's important who has that money and how prone to venture capital behavior that they are. But that it should hopefully lead to new companies and the like. The second is kind of the interaction of all the new technologies that everyone's very excited about: automation, self-driving cars, clean energy. There seems to be, I hate to use the word synergy, but there seems to be some sort of synergy in all these sorts of new innovations and new technologies that are coming out, where they seem to play off of each other very well. And I think that is one of the big reasons why we're so optimistic about growth potential. And similarly, and I wanted to add this in and also kind of touch off on the last question, the kind of the stimulus and everything, one of the things that economists look at when they're looking at innovation and entrepreneurship is the interaction between government, university, and private sector. And you can use the example of Silicon Valley and how one, they have a number of subsidies and from the government, and two, their reliance on Stanford and that pool of people. Or you could go to the Northeast and biopharmaceuticals and the whole Northeast, all the universities up there, and again, government subsidies. And I think the stimulus and the recent stimulus and the movement towards Green New Deal, all those sorts of things, it might create a lot of opportunities for entrepreneurs, and it might help the interaction there. And again, as a plug to Portland State, I think we're starting an entrepreneur club. So, you know, if you guys want workforce, come to us.
All right, we're getting to the point in the program where we'd like to take more questions from the audience. If you've got some questions, feel free to put those in the chat section, and Laura can either relay them or I can. Again, feel free to reach out and make that question now, because we would like to keep this as interactive. I was just actually thinking, maybe Daniel and Tori, if you have your thoughts on, what is being done for more equitable funding. We started touching on the fact that there may actually be more funding available, at least from all the savings that's going on. Maybe angel investors have more money. What can we do to make that funding be available for everyone and all constituencies?
That's well, capital and funding is always a tricky. I think Tori touched it on earlier. Having enough capital is never the thing you say, right? So Portland's always struggled a little bit, I think, at the higher levels of having capital in the region. But when you're looking at equity, the programs that are available typically aren't equitable. So some of the things that our partners are trying to do, and we've supported in, is trying to educate the small entrepreneurs that are coming through the communities of color, and educating them and teaching them that there are other ways. And Peter, I'm so glad to see that slide. It was quite eye-opening on the savings piece, because that is one of the ways that we have been educating our small entrepreneurs in the Latino space, is that sometimes there may not be access to capital, but you could create your own access to capital by establishing a savings of sorts for your business, because you have to plan and you have to prepare and you have to strategize. You don't just jump right in without somewhat of a plan, and that plan takes into account is access to capital. So that's one of the things that we're trying to do, is trying to keep it, making it equitable, is creating your own equity. Another, some of the other things that they've been doing is trying to reach out to some of the zips of the world, right? Those are the ways that we've been trying to get that into our community of colors and the entrepreneurs in the Latino space, specifically with Cocinemos, because that's the space that they're in and on the one-on-ones. So I think that's what I would like to add. I mean, I think there's larger issues in the entire system, but for us, that's what we're trying to do. We're trying to tackle it at the early stages.
Yeah, I think to jump in on Daniel, I agree. I think when we're talking about capital and equity, I mean, there's just deeply entrenched systemic things that continue to show up statistically that are showing that even business to business idea, merit, work ethic, all those withstanding, we're still seeing disproportionate that Black and brown entrepreneurs, particularly entrepreneurs of color, women entrepreneurs, are falling behind in terms of overall access to capital. I mean, it blows you away, because again, we're saying, how do we ensure that we can grow as an economy and be as competitive as possible? Means you need to have all oars in the water. And these individuals have tremendous ideas. They represent markets that would be more than willing to purchase those products. And so there's just a huge gap. I think some of the things, just to build off what Daniel is saying, it's true. And that we need to also teach from a financial literacy, that giving equity, seeking kind of one vein of capital is not what every company needs and not every startup needs. Some need to just build a product and just sell. And through growing a consumer base, they eventually have their own capital that they can do. So it's, and then for those who are pursuing, like they still say that the primary vehicle that I need to pursue capital, and equity is going to be a part of it. How do we make sure that those programs are designed in a way where we really are being more intentional to include them, to prep them? So a couple examples, what we're doing at the city, not perfect, but we are seeing some positive trends, is within our clean tech space. We have an eco capital program we do every year. We bring in venture capitalists from around the globe to participate. We've really made sure that in that space, again, knowing that that's an industry that we hope will continue to pop, that we are focusing on entrepreneurs of color and women to be prioritized. We have a great relationship with OEN, where they do some of the back of the house work and preparing those respective founders to be able to make their pitches. So again, that's the training, that's the preparation. And then we do the matchmaking. And I think, as you know, so much of this world, no matter how digital we are, it's still about networks. It's still about who you know, and the confidence that's built as a result of someone else dropping your name out of their mouth. And so we realize as a city, we have a pretty big wattage light bulb. And so through our partnerships, if we can be a vehicle that creates those connections more equitably, we're doing it. And I think we're seeing positive strides there. Probably about 6 years ago, we also ventured out with the county, and we started a startup fund centered on supporting BIPOC entrepreneurs. And we worked through Elevate Capital. And they've since gone on, they've taken those funds. They had an initial fund that they started. I think we were trying to reach 3 million, worked incredibly hard, but didn't get all the way there. But all those funds have gone out and they've already returned back. And I think they're now in the throes of raising an additional 42 million, centered on reaching, again, that group of BIPOC entrepreneurs, showing that they're viable, that they have products, that they are more than capable. So much of it is still rooted, I believe, in perception and systemic racism that oftentimes precludes, by simply the color of one's skin or their gender as well, whether or not they are fit to be an entrepreneur and worth our value of our investment. So I think the more that we can address that, we will find that we will be benefited as a whole, because there's so much just rich and raw innovation and talent happening across the spectrum of our state and our nation. So I think those are some of the things we really want to continue to lean into, because as Daniel said, you do need money to grow your idea at some point.
Yeah, there was an interesting comment just now, a slightly different topic, but that, there is a perception that, funding still ends up going to the tech community greater than other communities. How do we spread that around? How do we get food businesses and manufacturing businesses that are not tech related to get that attention as well?
I think some of it stems from oftentimes investors are like all of us. They want a sure thing, and so I think within the tech space, there has been a real sweet spot, Silicon Valley and the like, and a strong run. There's a bit of a formula. And so I think that helps to reduce the amount of risk assumed. But I think there are ways that we can talk about other industries that are just as capable. And also it's some of the work we have to do to build that out. So how can we say, as an example, we've been talking around building a stronger and more resilient food ecosystem within the region. We know that Portland, in particular Oregon, has a unique brand, and we are known as a foodie town. How do we build on that, where we can say, in the same way that we can help from a tech standpoint, help you sell your tamales at a farmer's market, and in 3 years have those tamales be a national, on national shelves across the country. I think those same ideas are very doable, and also realizing, how do we source locally? I mean, there's just such a strong brand when you can say products grown within Oregon, it just flies. And so I think there's some of the work, the more we can build out those narratives and show very clearly where that growth is there, I think you'll see the investment follow. The investment follows where there's clarity of a least amount of risk, even though you're risking and assuming that a company will grow. And so I think it's a testament to what we've seen in tech, that they really have built out models that have reduced a lot of those barriers. But I do believe that we can see it happen in other places as well. And the needs are different too. A tech company, all they need is an office and Wi-Fi. You know what I'm saying? They can get going. When you're saying food, there's a whole lot more involved. There's cold storage, there's that last mile distribution. There's so many other things, but yet food is a necessity. And some would even say it's a national security issue as well that we think about with climate change and all the like. And I think our region stands at a unique place with our assets to be strong in that way, to support this industry and not only retain it, but to grow it in scale.
You know, as we talk to our companies, and they have folks that, you know, that call us from our companies, and they're thinking about something to launch, or they have an idea, right? And the topic of capital comes, and they're in the tech space. Well, you know, investors are looking for a return, and tech has shown year after year that, yeah, there's a high risk or there's a moderate risk, but the return's worth it. And they don't have the overhead. So what we're seeing is that, yeah, for sure, we're working with the food folks, and they're a little longer return, but the investment sometimes is a lot less as well. So there's value there. It's just a lot of times the investors that we're seeking are looking for a larger play. So it's a little bit more. It's like you said, Tori. I think there's two different sides to that.
All right, Daniel, thank you. There's a question that popped up here, and maybe it's a little different topic than we've talked about. Maybe it's one for Peter, and I'll raise this question that came from the audience. It's, what do you foresee regarding the end of rental eviction moratoriums and mortgage payment forbearance? Are there any estimates of the number of households behind on rent and mortgage payments, and how is that going to impact, you know, the commercial real estate segment here in the next year or two?
Well, I don't necessarily have an answer to the first part of that question, and so, but some of the things that we're monitoring, you know, just working with our business recovery centers, or center, and our chamber, working with our partners, and even at City Hall, is we're trying to unpack what that new federal aid is going to be for commercial real estate leasing and ownership. So that's kind of what we're on right now. We haven't necessarily unpacked it fully. So those are the things that we're going to be looking at, and we have, you know, folks at our office and city manager's office that are strongly trying to get into the community to get that information, because we don't necessarily get it as frequently in economic development as some of the other departments. But definitely we'll be the ones that implement what comes out of that, for sure.
All right, we're coming up on 1 o'clock. Maybe what we should do is have everyone, you got a couple more comments. Laura was going to say something.
I think Peter wanted to comment on this real quick, and then we can wrap it up.
All right.
Quickly on the rental and the non-commercial side, that was a big concern on our previous forecast. One of the reasons I don't have a good answer for you is because things keep getting pushed down the line, and there was also federal aid for single renters, and I don't know how that's going to play out, and I don't know if they do forgiveness, how that's going to look, and exactly how it's going to. It's similar to what Daniel was talking about, unpacking what the new stimulus bill means for renters in the area is a big question. And then also what the state government is doing about it, because again, it's different everywhere. And we've had multiple moratorium, I can't even say that word, but so short answer is it's not good. It's not going to be a good thing, but it might not be as bad depending on how soft of a landing they are able to engineer.
Sorry to interrupt you, Peter. I was hoping you would answer that, so thank you. Why don't we have, if you guys, each of you would take a few minutes, just a few final comments, and then I think we're ready to wrap up. Why don't we start with Daniel? Any final thoughts today?
Final thoughts. Again, thank you, Laura, for putting this on. You know, we've been working really closely on building this entrepreneur ecosystem on the west side. I think it's important that we all take our role on the west side, because the more that you know, people think that they could build something here, the better. The city is committed to this. They have seen the value in entrepreneurship in years past through the tech industry, and now we're evolving into what is our backyard in the food industry and things like that. So we're just excited to be able to have the Excel Bootcamp coming up later this year. So these are all things that Hillsborough in years past was not known for. We were known for traded sector, big business, and you know, in the last 5 or 6 years since I've been here, coming with a different perspective, we've been trying to build out these types of efforts. So we're really excited. And again, I appreciate everybody on the panel and everybody that attended. That's about it for me.
Thank you, Daniel. Tori?
Yeah, I'll just conclude. Really appreciate the opportunity to join the call today and to talk about something that's incredibly important to our region, which is entrepreneurship. Really are the tip of the sword, both in terms of just our economic vitality and speaking to the future. I know for us as a city, we will continue to double down and provide those necessary resources, whether it be through our inclusive business resource network. If you're in Portland, we currently serve over 1,000 small businesses a year through partnerships with over 20 partners that are delivering that necessary light and long-term technical assistance touch to entrepreneurs as they navigate the waters of this world that we're in. Happy that TIE is a part of that collection of wonderful partners. And again, we realize that entrepreneurship, there is not a bad season to be an entrepreneur. There's always opportunity to solve problems. And we anticipate that even out of this pandemic, which has been incredibly painful, and have we experienced a lot of loss, that somehow there's going to be a unique strand of entrepreneurism that is going to define this season that we're in and really propel us moving forward as an economy, as a region. I think the main thing for us is we want to ensure that every entrepreneur that has a desire to do so has the same kind of equal and equitable footing to pursue those dreams for the benefit of our local region with respects to creating jobs, traded sector, and all the like. And so that's our commitment, and we really appreciate the opportunity to work with many of you that are on this call today and that are listening in.
Thank you, Tori. Peter?
Yeah, I just wanted to say that I learned a lot. It was really cool seeing all the programs and what everyone's doing, because as a forecaster, we take a very top-down view and we kind of assume things are going to happen, but it's very different than the mechanics of what's going on with people actually interacting with business leaders. So I just wanted to thank you. And if you have any questions, I saw there were some particular questions about like methodology for our forecast, just feel free to email me at holzman@pdx.edu. And thank you.
Thank you, Peter. Thank you, everyone. Laura, I'll turn it back over to you.
All right. Well, I think this has just been a fabulous conversation. So I really appreciate all the panelists and you, Ernie, in terms of moderating. And, you know, people have questions about the venture catalyst role or entrepreneurs out there that need some support in starting a business, you can reach me at laura@venturecatalyst.biz. And I also want to thank everyone in the audience because there were great questions throughout the program and it was wonderful to have it very interactive. So thank you so much to everybody and have a great rest of your day. Take care now.
Thank you. Take care.
Bye.